Hi everybody, it's Dave just before 1 o'clock on Thursday. News of the day really is to do with jobless claims, which were about as expected. Nothing new there, 370,000 versus 370,000. Durable goods were plus 0.2%, which is hardly anything, as opposed to the previous, of course, which was quite negative and was revised better at minus 3.7%. Meanwhile, in Europe, the Eurozone manufacturing index dropped to 45.9 versus 46.7, indicating contraction. And in China, the Purchasing Managers Index, which is the same thing for manufacturing activity, was 48.7 versus 49.3, indicating more contraction. So once again, we see the dollar up against the euro, the yen, just about everything. And that generally isn't a great sign for economic growth. But what we have now, of course, is tremendous worries heading into the weekend with the Eurozone back at the forefront. Meanwhile, back at Wall Street, the market is down a little bit. The S&P is tail dragging as far as I can see, and we're just kind of heading toward a long weekend. And maybe people don't want to be too long. Yesterday's absurd ramp based on rumors of more EU quantitative easing seemed rather odd, but was completely machine or algo driven. Here's XLK, which is, of course, technology, back down again after being up yesterday. Everybody's so happy about Hewlett-Packard, which is going to lay off 27,000 workers, which will reduce costs, and who reported a loss, but their loss was better than expectations, so initially the stock rallied sharp. The big rally yesterday was occasioned by, of course, the heavy weighting in Apple, which drove technology shares much higher. Here's XLF, banks. We had that late day rally yesterday off the lows, and now we're back down again, only slightly. Who knows what who knows what the afternoon will bring. I said yesterday, almost tongue-in-cheek, comically, whatever, that we could close green after I did the recording at 1 o'clock and we were down almost 200 points. How crazy is this? Materials sector, XLB, is still doing relatively well. Had a big pop yesterday afternoon, and I really didn't understand it fundamentally. I didn't see much in it other than it was probably more oversold than most, and obviously it came off this support level. But, base metals prices are still under some pressure. Here is IEF, Treasury bond ETF, down a little bit on the day, not much, but we're up at these nosebleed levels where this is just mattress money, as I've said many times, and has a negative yield to lock up your money for 10 years. Which makes absolutely no sense. Commodity sector DBC, well, it's up a little bit, maybe just filling this gap here where we broke down yesterday. And this is, I don't know, it's not discouraging or encouraging. It's a technical situation, in my opinion, where we're in this gap area. The dollar rally is very negative for commodity prices. Gold is slightly higher, and maybe, just maybe, it will decouple from the dollar, given the fundamental circumstances going on in Europe, China, and elsewhere. China is a heavy importer of gold. India has canceled its excise tax on gold, and they are a large purchaser of gold. In India, gold is considered a sign of true wealth. Yeah, here is JJC, which is copper, the leading base metal, and the leading prognosticator of economic conditions going forward. Doesn't look very good, does it? And it's clearly the data, manufacturing data that I cited at the beginning of this video, bears that out. This morning in the Eurozone, things were looking very good until we got to today's reading. We don't have the count here. I think that the market is actually trying to figure out what to do with it at this moment, but we're looking at a live quote anyway, and you can see it's down on the day. There we go. But markets were up 1% in Europe earlier. Why? Well, some banks were doing well in Belgium, and people were a little more enthusiastic about the idea that there was going to be some QE, even though the economic data that was announced was quite poor. Well, just for the heck of it, and because you're all driving this weekend or not for this long holiday weekend, here is UGA, which is gasoline. And you can see it's up 4 cents, not much, but we are in a steady decline going all the way back until April, and we've been going down in price. A lot of this has to do with poor economic data, which we've been reviewing. At the same time, the dollar is stronger and commodities are priced in dollars, so therefore we decline. Last up, we're looking at EEM, which is the Emerging Markets ETF. And just as we rallied yesterday afternoon sharply, we are down again today, and who knows what the afternoon close will look like. Okay, that's going to do it for me. Have a great day. We may or may not do a post tomorrow, Friday, as a lot of people will be taking off, and it's a special day for yours truly. Have a great day. We'll see you this afternoon with Dave's Daily.